Microsoft. It gets cut to sell. Consensus Azure growth, that's the cloud. They say they're at risk. Price target initiated at 212. It's kind of a broad software call, but their whole point is nobody's immune. Not even Microsoft, the alleged best of the best, the top dog, the head of the class. What's the story here?
The cream of the crop.
Yeah.
Keep going.
Keep going.
The top
Any
gun.
more?
Top guy.
Go ahead,
The best of the best. Prolonged macro.
Top of the heap, number one.
Oh, my goodness.
Prolonged macro downturn. Those were the words that I heard from the analyst, and I respect what the analyst is presenting in his scenario. But I don't like when you speak specifically about a stock that you are assigning a rating or a price target based on what the macro is going to do. Because what do you have to do in that situation? You have to be right twice. You have to be right about the company, and then you have to be right about the macro.
Do you? Well,
overall.
if you're right about the macro, you're going to be right about the company stock, aren't you?
Not necessarily. There are companies. I mean, if you could go back and look at the environment of 2022, and you could look at some healthcare names. You could look at McDonald's. You could look at other names where there was resiliency. I'm not saying that's the case in Microsoft, but I don't like assigning a prolonged macro downturn to the reasoning why you're going to downgrade Microsoft. Now, let me just speak directly to my personal ownership of it, my suggestion of it in the Stock Summit.
Got it.
I think on December 31st of 2023, when you reflect back, I think that Microsoft will have served you well if you invest in the company. Understand that I run a strategy that's based on what your balance sheet looks like and what's your momentum in the market. And I've said this over the last several weeks. When I look at Apple, when I look at Microsoft, when I look at Tesla, it is very obvious that they have lost their momentum. So decisions could be made in the coming quarters where the strategy moves out of those names or moves out of them and back into them again. That's something that was done in Apple last year. So there is that active element to the ownership of the mega caps. I want to be clear on that. That could unfold here in coming quarters.
I understand, but you picked this as one of your stock
because
summit picks with the idea that it was going to be a worker
in 2023. I think at the end of the race, this is a company that pays you to wait in terms of buying back shares, in terms of delivering on the dividend. I still think the Azure growth is going to be enough, or at least reach a moment where if there is a contraction, it's going to recover. And then the last point on all of it, and I think it speaks to the market, volatility has come down significantly. There's this calmness in the market that I don't think we felt in
VIX
many months.
19.5.
There's this overall odd calmness to the market right now. And I think that coming into the year, there was overwhelming bearishness, and it was reflected in positioning. And I don't know how you justify that right now. I'm not saying you get extensively bullish, but that overwhelming pessimism, you got to wash some of that away.
Well, that's why I asked the question, Steph, at the very top. Is it time to be less bearish, right? Bank of America's fund survey today says we're less bearish. We're still bearish, but a lot less bearish than we were in the fourth quarter of last year. They got the biggest underweight, at least from their fund manager survey, reveals the biggest underweight of U.S. stocks since October of 05.
Yeah. I mean, I kind of feel like I've gotten a little bit more positive in the last couple of months. And I know you and I talked on OT last week that I felt a little bit better about the global situation, right?
Because you haven't sounded really that positive when we've spoken.
A little more balanced, right? I mean, if you think about it, everyone was calling, myself included, a European recession. Numbers are getting revised higher. Did you see those Germany and the Eurozone, the ZEW stat, which is just sentiment data? It came in way better than expected, much more positive. The BOJ is revising their economic data higher than expected. China is reopening. That could be a huge tailwind. I don't think it's getting a lot of credit. I know they've got to prove a lot for sure. But then you come to the U.S., and the U.S. is actually not doing that bad, especially on the consumer side. And that's because we have this crazy strong job market. Wages are going higher. And now inflation is coming down. Costs are coming down. That's very positive. Consumers, 70% of our economy. I'm not saying we're not going to slow down. We're going to slow down for sure, for sure. But maybe we can handle these things, and maybe, just maybe, earnings, which is expected to be down 4.1% this quarter alone, maybe they're going to be better than expected. And if I have to just give you my assessment on the banks, and I know we're going to talk about the banks, but I actually thought the numbers were better than expected, better than feared.